Lesson number 15 of Ethics, Governance and Sustainability. The scope of lesson number 15, which deals with corporate sustainability reporting frameworks, includes within its ambit the GRI, that is a Global Reporting Initiative Sustainability Reporting Framework, UNGC, that is the United Nations Global Compact 10 Principles. So this we haven't covered in the previous lesson because it is there in the current lesson. The UNGC COP, which is the Communication on Progress. United Nations Principles for Responsible Investment, which has already been covered in the topic corporate governance and shareholders, and it's not repeated here. Next, sustainability indices, sustainability reporting in India, and finally integrated reporting. Let us look into these concepts one by one. GRI Sustainability Reporting Framework. So before we go into it, let us firstly analyze what is the meaning of sustainability reporting. So sustainability reporting is nothing but a process for disclosing publicly or disclosing in open to the public or in the public domain the company's philosophy or the company's economic, environmental and social performance. So performance in terms of ESG issues, that is economic or environment, social and governance issues, is what will be disclosed through this sustainability reporting. Unlike financial reporting, usually there is no strict format for a sustainability reporting. However, guidelines are something which are usually given by major institutes. So similarly, GRI, that is a Global Reporting Initiative, is something which has been in this field of providing sustainability framework to the countries, and majority of companies, whoever are like multinational corporations who have a lot of like capital and who are actually adopting the principles of sustainability, usually adopt to this GRI sustainability reporting framework. So what does this GRI sustainability reporting framework talk about, and what are the contents of this GRI sustainability report is what we need to go through. And before that, let me tell you what is GRI. So GRI is a global reporting initiative. It's like a separate body per se which has its own board of directors headquartered at Amsterdam and all. And the GRI, the concept of GRI is that it's as the name suggests, it is basically an initiative which is at the global level, which wants to standardize the non-financial reporting. Right? Since it's a non-financial reporting, it would like this is an initiative to standardize the non-financial reporting at a global level. That's why it is named as Global Reporting Initiative. Now let us look into the sustainability guidelines whichever has been issued. So G4 sustainability guidelines stand for Generation 4, so fourth generation sustainability guidelines. On the G4 sustainability guidelines, it is divided into basically two parts, part 1 and part 2. The part 1 deals with reporting principles and the standard disclosures, which means it basically talks about what are the principles for reporting, both the content as well as the quality of your report is something discussed under reporting principles. And the standard disclosures, we have what are all the standard things which a company shall disclose. And secondly, part 2 deals with implementation manual. So this basically is like a reporting guidance which should be consulted whenever the company is preparing its sustainability report. So implementation manual is like a guidance, and it will guide the company, whoever is making its report, as to how to make this particular report, right? Now let us look into in detail as to part 1, which is the main portion, because part 2, the implementation manual, is nothing but a guidance material. It's like how to use type. But part 1 deals actually deals with what are the contents and what are the requirements of your content, basic principles behind your content, and also the what are the standard disclosure which you need to have. So part 1, as we said, reporting principle talks about reporting content and reporting quality, whereas standard disclosures talk about general standard disclosures as well as specified standard disclosures. The reporting principles. So reporting principles, as seen in the on the earlier slide, they are divided into two: report content and report quality. And the report content, first thing you need to make sure is that your report should talk about your stakeholders, that is stakeholders inclusiveness. Your report should talk about whether the company has identified its stakeholders or not, what level of stakeholder engagement or stakeholder activism has happened during the reporting period, and number of grievances received from stakeholders, number of grievances resolved, number of grievances pending. So all these things shall be reflected in terms of stakeholders inclusiveness. Second, what we have is a sustainability context. So sustainability context refers to the organization's performance in the context of sustainability. So under sustainability context, at this current level or at this present level, what is the performance of the organization in the ESG issues is what should be reflected. And what we have is a materiality. So now, as the name suggests, the principle of materiality states that your report should only cover those aspects which would reflect the significant economic performance, significant environmental performance, or significant governance related performances, or environment related or economic related performances. So they should not talk about all minute things as well, but report should be something significant so that whoever is looking at the report will have a fair idea as to your sustainability context. And then finally, completeness. Now, by completeness, it basically means you need to make sure that you are giving a wholesome report, like which covers broader areas or boundaries related to all the ESG issues whichever have been taken care by the company during the reporting period, right? So it should not limit itself to only one thing. Now, even though it means where the company is contributing to various issues, so taking into context the principle of materiality, you need to ensure that you are disclosing as much as information as possible, which will give a complete and wholesome picture of the company's philosophy towards sustainability. Now, in terms of reporting quality, it shall be ensured that whatever has been reported, you need to make sure you are maintaining a balance in terms of positive and negative aspects. So by saying balance, we mean there should be something between any two, right? Now, some balance between two. What are these two? The positive as well as the negatives or negative impacts or negative influences or negative aspects, whichever have, or I mean, whichever have been taken by the company during the reporting period, right? So here it should be basically ensured that the report reflects both the positive as well as the negative aspects of the performance of the organization in terms of ESG issues. Second, comparability. When can we compile information? So we can come, sorry, when can we compare information? We can compare only when they are two consistently prepared reports. Right, so comparability happens only when they are prepared on a standard basis. Suppose if one company adopts a different guidelines of sustainability and so say in the previous year, sorry, in the previous year, assume you have adopted a previous set of a guideline, I mean, or some other set of a guidelines. Now you are adopting some other set of a guidelines. So there is definitely not a simple comparability which you can have between both the reports, and you cannot say, previous year and this year there's a growth of so and so, so and so, right? So instead, if you are adopting to G4, then adopt to G4 and then maintain a standard thing. Since G4 does not have a specific format per se, so you need to ensure that every year the reporting is in such a manner that you are sticking yourself to a particular standard so that there is an option of comparability. So comparability is nothing but you need to make sure your reporting is consistent and even the format itself is consistent so that there is comparability. Accuracy, so wherever possible, say whenever you're giving something related to figures or any other information which can be quanti you know quantifiable, then you should make sure that it is accurate in its details. Finally, timeliness. So say if you're reporting or scheduling your information um, every 2 years, 3 years, 4 years, it's of no use, right? So the timeliness of your reporting is also very important. So So it should not be like you release it once at a weekly time or once say monthly, or 1 year you start taking up the thing that I'll release it 6 months, every 6 months, next 1 year, or at times you release it immediately. It should not happen. So you should make sure that there is a regular schedule which you're sticking to for releasing of your sustainability. So if you're sticking for 1 year, then every 1 year you should come up with a sustainability report. Or say you're sticking it for only 6 months, then every 6 months you start coming up with a sustainability report. So that is how you need to make sure that your report as is comes up on a timely manner, say at any point, I mean at the regular time gap is something which is not specified, so that is a discretion of the company, but the timeliness, that is the regular schedule, be it any time, is something which you need to stick to. Okay, so this is about the timeliness. So this is a slide which explains about the reporting principles. So this is how you need to prepare. Do not try to think you need to have a detailed input on all these aspects. Make sure you are remembering the headings, and through the headings you should understand the context of it, right? Now let us look into the standard disclosures. The G4 Sustainability Guidelines for standard disclosures has two different things which we need to disclose. One, the general disclosures, and the second, the specified disclosures. Under general disclosures, what we have are 7 different disclosures which you need to ensure are present in your guidelines. Number 1, the strategy and analysis adopted by the company. Number 2, the basic organization profile of the company. Third, the material aspects and boundaries within which the company is actually functioning. Fourth, stakeholder engagement undertaken by the company, which we have seen under stakeholder inclusions as well. The report profile, and finally governance. Right. So the report profile is nothing but basic about the report. So what is the report about, and what are the guidelines in which, in terms of GRI 4, G4, which you have adopted, is something which you disclose on the report profile. And under governance, as to how the company is being governed, what are the basic corporate governance principles the company has adopted. So these are the general disclosures which you make, and in addition, finally, you have the ethics and integrity adopted by the company. So these 7 general disclosures you need to make in your report, and then there are 3 things which you need to be specifically making in your report, which are in terms of economic, environmental, and social performances or social aspects in which the company has performed. So this is about the standard disclosures which you need to have in your GRI G4 sustainability reporting framework, right? So at the end, at the end of this GRI G4, what I would like to suggest you is make sure you are making a table similar to this, so that this would help you recollect the content in your exam, and always relate the content with these headings. That is what helps you in giving a better answer in your exams, right? Nothing. So United Nations Global Compact 10 principles. This we have started in the previous chapter, but I haven't discussed in detail, for the reason that it is discussed separately in this particular topic. So here the United Nations Global Compact covers 10 principles which can be classified into 4 broader aspects, which are human rights, labor rights, environment, and anti-corruption. Let us look into what are these 10 principles. Firstly, respect human rights. Second, do not abuse human rights. So these two are pertaining to the concept of human rights. Are pertaining to are coming under the ambit of human rights. Next, freedom of association and right to collective bargaining. So this is in terms of the labor right. So labor or the workers shall be given the freedom of association and also for right to collective bargaining. That is, they can collectively ask the company for some demands or requests. Abolition of forced and or compulsory labor. So there cannot be any forced or compulsory labor in the company. Next, abolition of child labor. Child labor shall be totally abolished. And finally, no discrimination in employment. So these are the 4 principles in terms of labor rights. So there shall not be any kind of a discrimination based on sex, creed, caste, or whatever on any basis in terms of your employment. Next, what we have is environment. So on the environment, promote greater environmental responsibility. So you will promote it through your own activities, through awareness campaigns, through collaborating with any other organization for promoting environmental significance of environment in any particular region, etc. Then we have encouraging environment friendly techniques. So whenever you have an option of going for a technology which would have a greater impact on your environment, and some other technology which is environment friendly, however costly, you need to make sure you're opting for the environment friendly techniques. You should always encourage environment friendly techniques in the organization. So these two are pertaining to environment. And finally, anti-corruption. What we have is, the company should always strive to work against corruption, and a corruption in any form is something which shall be abolished or prohibited by the company. So these are the 10 principles given by the United Nations Global Compact. So now I'll just categorize in these 10 principles into 4 different broader classification, right? So what are they? Firstly, the human rights. So first 2, that is respect to human rights and do not abuse human rights, come under the ambit of human rights. Next, labor rights. So that is freedom of association, right to collective bargaining, abolition of the forced and compulsory labor, abolition of child labor, and also no discrimination in employment. Even that is covered under labor rights. Next, encouraging environment friendly techniques and promoting greater environment responsibility. This comes under environment. And finally, work against corruption. That comes under anti-corruption. So you need to remember these 4 broader principles for you to recollect the total 10 principles of United Nations Global Compact. So whenever there is any question on UNGC, you have to recollect and reproduce all these 10 principles. It is easy to remember when you remember the broader headings. So 2 under human rights, 2 principles under human rights, 4 principles under labor rights, 2 under environment, and 1 under anti-corruption makes it 10 principles for under the United Nations Global Compact. Now, what is this United Nations Global Compact COP, which is communication on progress? So as the name suggests, it is basically a disclosure you're making to the stakeholders on the progress you made in implementing the 10 principles of the UNGC. And where will you upload it? So you will be uploading it on your own website as well as on the website of the Global Compact. And is there any format for COP? The answer is no, but there is a basic thing which they would like you to disclose in your COP, which is in terms of, firstly a statement of continued support. So the management should give a statement saying that we provide continuous support to the United Nations Global Compact and its principles, and a letter from the management encouraging the use of or encouraging the adoption of COPs is something which has to be provided there. Second, description of the actions taken to implement the United Nations Global Compact principles. So what are the practical things which you have actually did, or what practical actions which the company had actually undertaken to implement the United Nations Global Compact principles shall be disclosed in the COP, right? In the COP, whichever has been prepared by the business participant, that is the company, it shall disclose what are all the practical actions undertaken by the company to implement the United Nations Global Compact principles. And then finally, a measurement of the outcomes or expected outcomes out of the practical actions whichever have been taken by the company has to be made in the communication on progress, right? And on how periodically we make it, let us look into it on the next slide. Initially, whenever you're making any COP submission, it can be made at 1 year after joining the initiative. So 1 year is the minimum gap for for any business participant to prepare its communication on progress after joining the initiative, because that is when you adopted the UNGC, and once you adopted the UNGC, you need to have some time to implement the UNGC. That is what is a 1 year. After 1 year, you need to give a submission as to what level of progress you made in implementation of the UNGC 10 principles. That is what is initial COP submission. Then what we have is subsequent COP submission. So after the initial submission, every subsequent submission will be after 1 year from the previous date of submission, right? So 1 year from the last submission will be that submission will be the subsequent, time limit for the subsequent COP submission. And there are two things which you can do. So in case you are not, you want to extend the time, okay, if you want to extend the time, then you can extend it by way of submitting a grace period letter which would grant you an additional 90 days where you would like to adjust your reporting cycle. Let us say this time you've gone for 1 year, but you would like to limit it to only, you would like to match it with your financial year. Say you're ending it by September, but your financial year is ending by March 31st. So you want your UNGC reporting also to be matching with the financial year reporting. In that case, you need to give an adjustment request letter, which is only for one time throughout the lifetime of the business participant, wherein it will be deferring your reporting to for up to 11 months in order to adjust your reporting cycle only, right? And where a company or a business participant is not submitting its COP within the deadline, then it will be marked as non-communicating, and where it is non-communicating for more than 11 months, it will be totally expelled from the Global Compact. So this is about the United Nations Global Compact communication on progress. Under sustainability indices, we need to discuss three major sustainability indices. So index is nothing but giving you a data of the existing stocks. Say Nifty 50. What does it talk about? It talks about the top 50 companies as per market capitalization on the National Stock Exchange, and how does their stock perform will be simply reflected in a single index. So whenever we're making an index, it is not of a single company, it will definitely of more than one company, and the index will help us understand as to how the companies collectively are performing in a country. So why do we look into Nifty or Sensex? Those are the combination of topmost companies of the country. So if the Nifty is underperforming or the Sensex is underperforming, we assume that the industry of the country itself is underperforming. So for that, they select companies from various industries. Over here, since they are sustainability indices, these are totally focused only on sustainability. Now, firstly, let us look into the Dow-Jones Sustainability Index. So what does this do? It will track the financial performance of more than 300 leading sustainability driven companies worldwide, which represent top 10% of the leading sustainability companies. Okay, so Dow Jones Sustainability Index, it will track the financial performance of more than 300 leading sustainability driven companies. So here it is not giving you a sustainability index, but it will identify the top 10% of the leading sustainability companies. So firstly, it will track and it will identify what are all the leading sustainability companies in the world. And all the leading sustainability companies in the world, the top 10%, which would be approx 300, would be analyzed in terms of their financial performance. So this index will help the investor understand as to how a company which is sustainably sound is performing in terms of its financial parameters. Okay, so that is simply about the Dow Jones Sustainability Index. The ESG index and the S&P's ESG India index both are, so some are like almost similar. So ESG index, it quantifies the company's ESG practices into a scoring system, and then it will give a rank for each company against its peers, right? Similarly, an S&G's poor index in India index, what does it do? In India, in the National Stock Exchange, what are all the companies listed? The top 500 companies as per their market capitalization, it will take into it. And of the top 500 companies, it will make an index of 50 companies as measured by the environment, social, and governance parameters. And total put together, all these 50 companies' performance will be given in terms of a S&P ESG India index. So these three are the sustainability indices which are prominent and which we need to remember. Sustainability reporting in India. So when we talk about sustainability reporting in India, we need to know what is meant by National Voluntary Guidelines 2011. So this is covered on the previous chapter, but we didn't discuss it there because this is also covered in this particular topic. Right, under National Voluntary Guidelines 2011, what we need to remember is basically these are the guidelines which have been issued by the MCA, which contain comprehensive principles which have to be adopted by the companies as part of their business practices. As of now, the 2018 guidelines are open for public comments, which are not yet passed. I mean, which are not yet finalized. However, what are these guidelines? So they contain 9 basic principles, which, if adopted by the companies, make them responsible businesses. So now let us look into what are these 9 principles. Number one, ethics, transparency, and accountability. So this talks about how a company should be ethically good and ethically active, like in terms of anti-bribery laws and all, and compliance with anti-bribery laws and all, and transparency through its disclosures and accountability of its activities. Principle number 2 talks about life cycle sustainability. Now, throughout the life cycle, that is cradle to grave, whether the company's products are sustainable or not, even the services. Third, employee well-being. Now, what level of, how are you taking care of your employees? What activities or what initiatives you have taken to protect your employees' well-being, health, safety measures, training to your employees is something which is covered under the NVGs. I'm sorry, under the employee well-being. Next, stakeholder engagement. So identification of internal, external stakeholders, preparing and mapping of the stakeholders and looking at their demands, solving of their grievances, everything comes under stakeholder engagement. Next, the principle on human rights. So this again, similar, these are all the things which have already been covered on in the previous topic. So human rights, protection of human rights, ensuring you're not abusing the human rights is something which is important. Next, environment. Now, similar to your UNGC 10 principles, you can remember that particular point here. So environment, promoting environment friendly techniques, and also like reporting as to what level of environment activities the company has taken place is also coming under this principle on environment. Next, policy advocacy. This is very important. So what is meant by policy advocacy? So policy advocacy means the company, whether it on tie up with any other company, like collaborating with any other company, or on its own, has it raised any query or has it raised any grievance to the government to ensure there is a change in the policy for the sake of the industry, right? So policy, when will you be a responsible business where a problem is faced by the industry and where you are actually having that, you're having that influence on the government, you go and influence the government stating that this has a problem on the entire industry, and hence so and so regulation or law has to be amended. And if the law is amended, that is when it is termed as a policy advocacy. So what measures you will take to ensure the industry is safer? So as a business, responsible business, you should not just think about you as a company, you should think about the entire industry and the society. That is what is policy advocacy. Next, the inclusive growth and equitable development is nothing but the CSR activities. So the company should ensure that it is also ensuring the development of its own employees and also of its society. So inclusive development, along with me, you also develop, and equitable development, right? So inclusive growth and equitable development. So equal development, which you would ensure for the region. So it's not like there's no partiality in terms of any of the things which the company does. So the corporate social responsibility initiatives the company takes into picture is also important under the NVGs. And the finally customers. So customer is the king. So what level of products, so what quality of products you're providing to the customers is also very vital and important. So these are the 9 major principles which have been given by the National Voluntary under the National Voluntary Guidelines 2011 by the MCA. And based on these 9 principles, the SEBI has stipulated for a business responsibility report which the company shall do. So that comes under sustainability reporting in India. So in India, the major sustainability reporting stipulated as on date is the business responsibility report, and the format of it has been stipulated by the SEBI. So the business responsibility report is applicable for the top 500 listed companies as per their market capitalization as on the date of the as on the last date of the financial year. And such BRR contains the following sections, which are general information about the company. So section A is the general information, B financial details, C other details, D BR information, that is business responsibility information, and then finally principal wise performance. So section E is something which I will not show you format, but section A, B, C, D is something which I'll show you like a screenshot of the format section A, B, C, D. Why am I not showing section E? Is that principal wise performance is nothing but for each principle, whichever you have seen under NVG, for all the 9 principles, each principle, how the company has performed will be given under section E. So there is a questionnaire for each principle and the company has to answer that questionnaire. It's as simple as that. Now, like looking into the contents of section A, business responsibility report. Under that, section A contains general information about the company, wherein it talks about the SIN, the name of the company, registered office, website, email ID, financial year, and what are the industry code, the NIC code which the company has, 3 key products or services the company manufactures or the services that the company provides, and the number of locations where the business activity is undertaken, which may be international locations or national locations, and what are all the markets which your products serve or your services expand into. So these are the general information about the company under section A. The section B, the financial details, the basic financial details as to the paid up capital, total turnover, all in rupees, and then total profit after taxes, PAT, and spending on CSR as percentage of PAT. So here you should not confuse it with percentage as per 135 read with section 198. So here it is as per the PAT. So CSR divided by the PAT into 100 is what is the percentage of spend you have on as per your PAT. So this is not as per the 3 years average net profit into 2%. That is not, this is not the percentage. So under this, as per the profit after tax for the current year, what is your spend on CSR? So this can be even less than 2%. It's not, it's okay. And then what are the list of activities in which you have spent your expenditure, right? So that is what is like the 5th point. So these are the basic details under section B. So section C is about the other details. Under section C, it asks about whether the company has any subsidiary company or the companies. Then, whether those subsidiary companies or the subsidiary companies also participate in the BR initiatives of your company. And then, what are the number of such subsidiary companies? And again, do any other entity, that is, whether you're supplier, distributor, or any other person, does whoever has having any business relationship with the company, whether even they participate in the BR initiatives of the company is something which you need to provide under. Now in the section D, which is the important one, so we need to disclose the board BR information, and this BR information is nothing but the business responsibility information, under which firstly you need to give the details of the director who is responsible for implementation of the BR, right? So the board of directors shall decide who is the director who is responsible for the implementation of the BR policy. and his DIN number, name, and destination has to be specified. As the details of the BR head, so who is the BR head is something which needs to be specified. So the can be one or two. So it can be even a person who is a director, or even a non-director can also be a BR head. Now starts the core element of the BRR, wherein we need to give the principal wise performance or principal-based compliances in terms of the BRR. So we have if you see there, the 9 columns represent the 9 principles which we have covered under the NVGs. So for each principle, these questions has to be answered. So under that, firstly, do you have a policy for these principles? For each of these principles, if yes, then have it why. So why shall be something which shall be given under. Now you need to write it as why under each of these blocks, right? Like that in every block. If there is no, then you will write as N, right? So that depends on whether your company has a policy or not, right? Now, if the company doesn't have a policy, then all the other things from 2 to 6 are something which are not applicable. So whatever you're seeing on this page from 2 to all other things will not be applied if the company doesn't have a policy. But where the company has a policy, then the other questions follow, which are whether the company the policy has been formulated in consultation with relevant stakeholders. Matlab, you communicated with the relevant stakeholders and consulted and taken their review or not, and whether it conforms to any national or international standards, then whether it has been approved by the board of directors. If it has been approved by the board of directors, who signed it is also important. Then whether it has a specified committee of the board or directors officials to oversee the implementation of the policy. So whether do you have a specific committee for it? If not, no, it can be even an internal or an external committee, that's fine. Next, so whether have you uploaded it online, then the link of it, whether it has been communicated properly to the relevant stakeholders or not, do you have an in-house structure for implementation of it or not, if there is there any grievance redressal mechanism for it or not, and whether have you carried out independent audit or evaluation of working of the policy by any external or internal agency. These are the questions asked which you need to specify for each of the principles. And if the answer for your question number 1 is no, that is the company does not have a policy, then you need to answer these questions. That is, why didn't you have a policy? Because you have not understood the principle, or it is not at a stage where it finds itself to formulate one policy, and it does not have a financial resource to do it, or it is planned to be done within the next 6 months or 1 year or any other reason. And for each such reason, under each such principle, wherever you don't have a policy, you need to tick it here, right? So you need to tick, suppose in principle number 1 you don't have a policy. Why don't you have a policy? Say you don't have manpower, then you will tick it here, right? So principle number 5 also you don't have a policy. Why? Because you found that it's not required for you as of this stage, then you will tick it here. So that is how you will prepare a business responsibility report for these two under each principle. Now, so as per the governance is concerned, so how frequently does your board of directors or company directors talk about your BR performance, and whether do you publish a BR or a sustainability report is something which will be asked, right? So that is about the business responsibility reporting. So under business responsibility reporting, the four sections, section A to D, are something which are very important. And all these sections, all these four sections play a crucial role in understanding the business responsible initiatives of the company. And as told earlier, section E about the principal based performance talks about each principle and how has the company performed in principle is detailed under section E. Now let us discuss about the integrated reporting. So what is integrated reporting? So integrated reporting is nothing but financial reporting plus sustainability reporting. So integrated, the name itself means like integrating two different things. So where you integrate both your financial as well as sustainable reporting aspects, then we refer it to as integrated reporting. So under integrated reporting, the International Integrated Reporting Framework is something which is very important, which has been given by the International Integrated Reporting Council, IIRC. And under this framework, we have the guiding principles which talk about the strategic. So firstly, the guiding principles which talk about strategic focus and future orientation. So your integrated report should contain what is the strategic focus and future orientation of the company. Next, the connectivity of information. So wherein the report is expected to show the combination or the interrelatedness or the dependencies between the factors which are affecting the organization's ability to create the value of the organization. So whatever you have the information, then relate it or connect it with any other information and let them know. So because of this, this had happened, and because of that, this is what is happening. So the chain reaction of the company's activities is something which shall be specified. So say one financial activity, assume you have invested or you are invested in setting up a wind turbine. Okay, so that had impacted in saving energy. So your financial aspect had actually given you again a financial saving. At the same time, you are ensuring a sustainable usage of your resources. So that way you need to connect your information in your integrated report. Next, stakeholder relationship. So what level of, what your report should basically provide an insight as to the organization relationship with its stakeholders. Next, materiality. So as for any other report, so you need to ensure that whatever has been reported is something which is material in nature, and it shall be concise. So you cannot disclose everything in detail. It shall be concise, shall be reliable and complete. So reliability comes only when the company is actually ensuring the facts or ensuring that the facts are not misrepresented, and you need to make sure that taking into picture the concept of materiality, whatever has been discussed is discussed in complete and in full. And finally, you need to make sure there is a consistency of your reporting, which will ensure comparability of your reports from your previous reports. So these are the guiding principles for IAR. And under IARF, we also have content elements. So, this is somewhat like your GRI G4. So, wherein you have reporting principles and reporting quality. Similar to that, here you have already seen the guiding principles. So, these are the reporting principles kind of thing. Now, the content elements. So, what what should be your content? So, what should be the basic content of your integrated report? First is the organization overview and external environment. So, what does the organization do, and what are the circumstances under which the, or what are the industries or the circumstances under which the organization is operating shall be disclosed under this. Second, the governance. So what is the governance structure of the organization has to be disclosed. Next, the business model. What is a business model? So does it, every business has its own business model, right? So one may be an e-commerce, completely online business. One may be totally supply chain management. So it all depends on supply chain, or one may be only delivery. So like that, each business has its own business model. So what is the business model has to be disclosed. What level of risks and opportunities the company has. Next, what is the business strategy and also the resource allocation the company. How does the company does its resource allocation? Next, the performance of the company in terms of its outcomes on the capital invested or other things. Next, the outlook as to what are the challenges the company faces, or what are the challenges the company is likely to face, and what are the uncertainties the company is likely to have in the near future, and what level of implications or impacts such challenges have on the company's business model and the performance has to be disclosed. And finally, the basis of presentation, that is, how does what how did the organization determine as to what has to be included in the report is also to be disclosed. So it can be through board discussions, or it can be a recommendation from the CEO to the board which has been accepted, whatever it is, right? So these are the basic content elements which are expected in an integrated report. Now, in terms of Indian scenario, so in India, the listed entities are expected to have integrated reporting, and that has been, it has not yet been mandated by the SEBI, but SEBI has issued a circular wherein it recommended, or it said that the top 500 listed companies in India, as per their market capitalization, for whom the business responsibility reporting is applicable, they may voluntarily adopt preparing an integrated report in their annual reports. Right. So these are the following guidelines. So it said it firstly should be, it may be voluntarily adopted by from financial 1718 by those companies which had required to prepare BRR. It can be provided in the annual report either separately or by incorporating it in the MDA, that is management discussion analysis, or by preparing a separate report per se, which is a separate booklet which you can circulate. And if you have already provided information which is also forming part of your integrated report in some other report, then yes, a simple reference to it can be made in your integrated reporting. And the same integrated report, instead of supplying it, instead of making it part of annual report and making it a bulky document, so in order, like, save Be Green or Save Environment Initiative, you can upload it on your websites and provide a link thereof in your annual report. Even that is totally acceptable. And also the SEBI had suggested for adoption of the international integrated reporting framework, which we have discussed in the previous two slides, right? So this is about the integrated reporting by listed entities in India. So this lesson, you should ensure that each and every topic is covered in detail and you understand the essence of each and every topic. So because these are the topics which are usually asked in your exams frequently, right? Thank you.